Hello everyone, it's Kevin from FSL1 Malaysia. Yeah, today I'm glad to see all of you here. I know it's 1 p.m., especially it's just after lunchtime, and I'm glad to see all of you here. So give me a second. Try to share my screen. Okay, well, just check with you. Is my screen clear?
Hi Kevin, your screen is clear. Maybe you may turn off your sound, background sound.
Oh, okay, cool.
Okay.
Okay, hi everyone, it's Kevin here from FSL1 Malaysia research team. So actually today's topic is kind of easy, it's kind of simple, and I wouldn't want to use a lot of tedious slide, a lot of formula, a lot of market outlook to flood into your mind. So it's just very simple. Today I'm gonna show you an alternative why you shouldn't put your money in a fixed deposit. And yeah, that's our topic, which is putting money in fixed deposit is a worst financial decision. So yeah, first and foremost, before I start my presentation, just I want to congrats to all of you who attended here, especially for the women, because today is an International Women's Day, and you know our boss, we FSM, we are very generous. We are giving you a 30 ringgit touch and go e-wallet for any trade on our platform, any lump sum trade. Yeah. So if you want to know more about the rules and regulation, feel free to visit our website, and we will have more details there. So yeah, as I mentioned earlier, this is not a very tough presentation, and you wouldn't see any tedious slide. Probably this is the most tedious slide you have ever seen in the presentation. So yeah, it's just a disclaimer because my compliance want me to do so. Yeah, it's not any investment advice, and if you want to know more, then feel free to approach your financial representative. So yeah, this is probably the second tedious slide you have ever seen in the presentation. This is just my profile. I graduated from University of Malaya, and prior to IFAS, actually I'm an equity research analyst in UOB Asset Management, and also I'm a CRSRL license holder and also a CFA level 2 candidate. So yeah, back to our topic: why you shouldn't put your money in the fixed deposit. So it's just a very simple way to illustrate fixed deposit for those who don't understand what it is. So the fixed deposit, easy as simple as that. You put your money into the banks, then the banks will generate a so-called guaranteed return to you. So usually nowadays, if you go and surf all these internet, all the social media, what can they provide you? They'll provide you about 4% promo rate, and even if better, 4.2, 4.3% of the fixed deposit rate. But usually, as general without promotion rate, actually I just check on the Bloomberg, and it just provide you a 3.8%. So as average, I just use 4% as an average rate. So yeah, it's just a very simple mathematic here. If you put your money in a fixed deposit, 6 months, 4% per annum, you will gain 200 ringgit after 1 year. So back to our topic, why I say that fixed deposit is not a very good place for you when it comes to wealth management. For sure, just a disclaimer, I do have some of my money in the fixed deposit as well, but when it comes to investment management, definitely fixed deposit is a no-no for me. Why? Although the good things for fixed deposit is it has a very predictable kind of cash flow, and also it has safety and security because all your cash are guaranteed, are insured under the PIDM. However, what is a bad thing for fixed deposit? First and foremost, lack of flexibility. Let's say if you put your money in a fixed deposit, it definitely need to lock you in a certain time frame. Usually it will be 3 months, 6 months, 1 year. Meaning that you need to put all your money in this fixed deposit in this time frame in order to generate the potential return. So let's say if you put your savings inside the fixed deposit and you're hoping to gain the 4% after 1 year, and suddenly 2 months later your girlfriend tell you, hey, shall we go to Bangkok because I want to try a tom yum there. Then you don't have a spare cash here. So what should you do? You need to withdraw the money from fixed deposit. And what is the consequence? Meaning that you have lost your potential return from fixed deposit. All right. Okay. So definitely fixed deposit in some sense is a good instrument, but when it comes to investment, if you're putting your money in the fixed deposit because you are hoping to gain a 4% return, it's a no for me, because the other part, opportunity cost. Opportunity. So what is opportunity cost means? It means that let's say you know that the market nowadays is so low, And let's say you suddenly you feel like, oh, you want to invest in something. Actually, that doesn't matter. You want to invest in the stock market, you want to invest in any securities, or even you want to invest in property. All these things you need cash. Okay, so what you should do when you don't have cash, you need to withdraw the money from fixed deposit. And what is the consequence? Again, you lost all the percentage, the potential return from fixed deposit. So yeah, here I want to introduce you some of the alternative if you don't need to put your money in a fixed deposit. And it's not any investment advice. I'm not like a guru outside there. I'm not trying to pushing you some of the very gung ho mutual funds yet, but I'm just providing you an alternative if you don't want to put your money in a fixed deposit. So when it comes to investment, right? For sure, if you approach any agent out there, any people outside there, they will tell you, they'll flood a lot of information into your mind why you should invest. Maybe you need want to beat the market, you want to achieve a financial goal, blah blah blah. But actually, when it comes to investment, right, you don't need to be overcomplicated in investment. For sure, when it comes to investment, some of the people, especially those traders, right, and all those are very sophisticated kind of investment, we did use some of the very complicated kind of formula. But for most of the people out there, you are already focused on your what you are doing right now. So what you're trying to achieve for investment is actually you just want to beat the inflation. You just want to achieve some of the financial goal, very minimum kind of return you are required. So yeah, a lot of people also say that I put your money in the stock market, then last 2 years is not a good year for stock market, then I lose money. So a lot of people, they are even argue that cash is king. If you hold your money, you don't lose anything. But you need to know inflation, like it or not, is eroding your real purchasing power. So although it's a sad fact that probably your increment, I would say that it's most of the time probably it will lose your the inflation rate. Although Malaysian inflation rate 3.7% is quite manageable, but who knows in the next decades it gonna eroding your real purchasing power. So it's just a very simple picture to illustrate this. Last time, 20 years ago, how much stuff you can buy in a Tesco with 50 ringgit. Nowadays, if you go to Tesco, you just use 50 ringgit. How much you can buy? Probably just very minimum kind of things. That's why when it comes to investment, you are not really required to generate, oh, I want to gain 1000% return. What you want to achieve is just as simple as that. You want to beat inflation. Okay, so yeah, this is just a simple chart to makes me looks professional a bit lah. So it's just the inflation rate of Malaysia, and you can see that there is an uptrend, especially since COVID there. So nowadays the Malaysian inflation rate is about 3.7%, and especially the core inflation rate is keep hovering at that area, meaning that probably a lot of people like you guys already experienced your real purchasing power is gonna eroding year by year. So yeah, this slide, very simple. It's just the power of compounding. I'm sure that a lot of people already know what is the power of compounding, because your agent, your friends outside there keep encouraging you to invest because they say that, oh, the power of compounding is very good. It's very good. Then what is the best thing for power of compounding? Although it's a little bit non-halal here because they got 3 piggy banks, but what I want to illustrate here is it's just a simple mathematic. If you put your money within the next 3 years, you are able to generate this kind of return. So by the 3 years time, if you don't invest at all, how many would you get? Let's say if you have 10K 3 years ago, 10 years later, you only have you will still have 3K left, but the real purchasing power, because 10K eventually it will erode by the inflation. Next, if you invest without compounding, yeah, this is the amount you will get. And if you compounded the investment, obviously you will get a higher percentage of return. So yeah, it's just a very simple way. And also I want to encourage you investing because you can create wealth by investing. It's just a simple way to illustrate. Let's say for S&P 500, it's a no-brainer play. If you keep putting your money, so-called regular savings plan, if you keep putting your money in the S&P 500 throughout the last 10 years, it's a no-brainer play. No matter the market up, no matter the market down, you just keep putting your money inside. How much percent you can get? It's about 170%. So yeah, it's a pretty good return in the past in the last 10 years. And I'm sure that nowadays, if I show this chart, then maybe you will argue with me. A lot of people also show me this, but who knows what can happen in the future? The market's so bad now. Why I should invest? Just remember, in the last few years, when people are showing you this chart and maybe he or she tell you that it will achieve this percent of return in the next few years, similarly, you will also argue with them the same statement, right? So, okay, obviously, I don't know what going to happen in the next 10 years, but what I can assure you is if you don't invest at all, for sure, your real purchasing power gonna be eroded. This is what I can assure you. Usually when it comes to investment, right, we don't really guarantee you something. But what I can guarantee you here is you need investment to beat inflation. All right. So back to our topic, why you should consider another alternative, especially when it comes to fixed deposit. So for sure, when it comes to mutual fund, right, you got a variety of choices of future fund. You got equity, you got bond, you got PRS, you got alternative investment. But I don't want to flood you with a lot of complicated information. What I want to introduce you here is money market. It's a very, very good alternative with if you want to compare against FD. For sure. A lot of people out there, I mean, it's not only you guys, it's also some of my friends, some of my relatives. They asking me, I want to invest, but I'm afraid of losing money. So when you post this kind of question on social media, especially I still remember last night when I was surfing Xiaohongshu, is one of my social media. So I saw some of the queries they posted. The guy is asking that, oh, I want to invest, but I don't want to invest in FD, but I'm afraid of losing money. Where should I invest in? Down there, a lot of people they are commenting a lot of which I think is not very good answer. They are talking about, oh, you should invest in value stock. You should invest in those kind of so-called fixed deposit for crypto because it provides you a return. You should invest in cash trust. I'm not saying that all these instruments are not good. In some sense, maybe it's suitable from some investors, but you need to back to the topic. The person who asking the question, he or she just want an alternative for fixed deposit, meaning that he don't want to bear this kind of risk, but he want to see some percent of return as well. So that's why money market fund is very, very good alternative for this. Why I say money market fund is good, okay? It's just very simple. Three things: flexible, daily interest, and no service charge. So the first one, the flexible. When you invest in money market, you don't need to wait until 1 year, 6 months, or 2 years, 3 years to withdraw the money. So let's say if you put your money in fixed deposit, you need to lock your money inside 1 year. And if you withdraw the money within this 1 year, anytime, you will lose your potential return. However, on the other hand, if you buy money market fund, if you bought money market fund, let's say if 2 months later you feel like I don't want to put my money in the money market fund anymore. I want to withdraw my money and hack my money to sleep. As long as you like, no worries, because all the interest are accumulated on a daily basis. Right? So meaning that no matter how long you plan to take out your money, it doesn't matter because the interest is still accumulated on a daily basis. It's not like fixed deposit. Fixed deposit, usually most of the fixed deposit, they are accumulated on a 6 month, on a 1 year basis. But for money market fund, it's not. As long as you like, you can withdraw your money market. You can withdraw your money anytime, anywhere. And last but not the least, no service charge for money market. It's unlike when you buy like some of the mutual fund, you're gonna charge by about 1%, 3%, and sometimes FSM1 they do offer some promo like 0.5% or 0%. But when it comes to money market fund, no worries because you got no service charge for that. All right. So very simple way. How does a fixed deposit work? Basically, it's just as simple as that. You put your money in the banks, and banks in return they will give you some amount of money after a time period. So how does a money market fund work? If you put your money in a money market fund, meaning that you are putting your money to let some of the fund manager to handle the money. And what will the fund manager do? The fund manager will put your money in short-term financing. In a very layman term, is basically putting your money in a corporate fixed deposit. All right. So the return you are able to achieve by investing in a money market fund. So it more or less simple as it's more or less similar compared to fixed deposit. So this max is also one of the very easy way to illustrate the potential return you are able to generate from the money market. So yep, on the left hand side is 4% and you are able to generate about 200 ringgit after 1 year. So for the money market fund, 3.5%, and you're able to generate a slightly lower, but you can get a lot of liquidity by investing in a money market fund. So yeah, this is just a very easy way to illustrate why you should invest in money market fund if you want to find some alternative for fixed deposit. For sure, if you invest your money in the banks, the banks usually they will have CASA, which is current account, savings account, and also the fixed deposit account. The current account, savings account probably can offer you about 1% to 2% kind of return. So it's out already. I mean, when it comes to investment. But when it comes to fixed deposit, banks can offer you about 4%. But money market, how much percent you can gain from there? No worries, I will show you an illustration later on. But now I want to tell you what are the pros and cons for money market fund. So the first and foremost and the most crucial thing for money market fund is a very high liquidity. Like one of the illustration I showed you just now. You put your money in the bank, you withdraw the money before a time, you lost all the potential return. You put your money in a money market fund, 2 months later, 3 months later, you want to withdraw money, feel free to do so, okay? So yeah, I want to tumpang again the some of the hot topic, OpenAI is I asked OpenAI to create a table, compare a fixed deposit versus a money market fund. So you can easily see that the money market fund is one of a very low risk kind of return. And although when it comes to investment, we don't really guarantee you how much return you can get. But what I can tell you here is historically, I would say 99%, or almost very minimum case that a money market fund, you will see a red color on your portfolio. Because basically it also invests in a fixed deposit, but only those corporate fixed deposit. I mean, it's a short-term negotiable deposit, this kind of very short-term financing instruments. So yeah, these are some of the money market funds that are available on our platform. So if you can see on the right hand side, 2018, 2019, how much money market fund can offer you is about 3+%, which you can imagine actually it's a more or less similar return compared to the fixed deposit, right? Meanwhile, for the 2022, 2020, 2021, 2022, you can see that the return actually are slightly lower. So what does why has this happened? It's very simple, because of the overnight policy rate. So what is overnight policy rate? Is actually is called as interest rate, or in Chinese 隔夜利率. So yeah, this interest rate is some of the tools, it's a monetary tools that used by Bank Negara Malaysia to manage their monetary policy. But I don't want to go too deep into this. So what you want to know this, what you want to know what is the OPR? Nowadays, the OPR rate is 2.75%. Back in 2018, 2019, the OPR rate is 3%. After that, 2022, 2021, 2022, 2020 until 2022, the OPR rate is about 1.75%. So how you illustrate, how you can interpret this OPR rate to the return of money market fund and also the fixed deposit. So usually when it comes to this kind of investment, they will use the interest rate as a benchmark. So let's say in 2022, because of the interest rate is about 1.75%. So usually the fixed deposit, they will offer a slightly higher return compared to what the interest rate can offer you. And similarly, the money market will also work as a similar way, which most of the time it will offer you a slightly higher return compared to interest rate. That's why you can see a divergence between the first 2 years and the last 3 years, and the last 3 years, the difference between the return, because of the difference between OPR. So back in 2018, 2019, when the OPR rate is 3%, they can offer you this kind of return. Nowadays, the OPR rate is 2.75%. So you can gauge how much of return you are able to generate from there. So apart from money market, right? If you feel like, ayo, money market so sian, I want to invest in something higher risky, but I don't want to see red color on my portfolio. I don't want to manage this kind of risk. I just want to sleep well at night and able to generate a return. So I want to introduce to you an alternative, which is bond. So what is bond? Actually, bond is a it's I can admit it's little bit complicated, and probably you got a lot you got lack of way to understand what is bond, because out there all those guru, all those internet, they are teaching you equity, they are teaching you crypto, they are teaching you property. Why? Because it's easy to teach. it's just simple as that. You can imagine like guru out there. If you invest in bond, invest in equity, you can able to generate 100% return per year. But when it comes to bond, can you imagine how boring it is when the guru want to teach you? If you invest in bond, you are able to generate 5% per year. It's kind of boring, and is less exciting, especially for the audience. So when it comes to bonds, right? I gotta admit it, a lot of investors out there, they don't understand about bonds. So they feel like, oh, bond is a tool that only allow those rich guys to invest. I would say that is no, okay? So how does a bond how does a bond works? A lot of people out there, you invest in mortgage, you invest in you get loan from banks. So in bonds, basically it's just similar as how banks lend you the money, meaning that they provide you financing, because they provide you financing to purchase your house. So in the case of bond, right, you can imagine the banks are lending you financing. They are giving you they're saying, oh, Kevin, iFast Capital Research Analyst, gaining 3K salary per month. Ayo, jialat, I'm gonna charge you a higher interest rate for that, because from the bank's perspective, right, they're gonna bear the risk taken by them when they want to provide financing to Kevin, because they don't know Kevin 3K salary, he will run away or not with the money. So they need to have a higher yield in order to compensate their risk. The second case, when they want to invest the money, let's say to Bill Gates, do you think that the Bill Gates will take our money and run away, man? I mean, I don't know personally, I don't know, but definitely the Bill Gates, what Bill Gates earn is definitely higher than Kevin a lot. So when the banks, they want to provide financing to Bill Gates, they will charge a slightly lower interest rate compared to Kevin. So when it comes to bonds, right, it's just as simple as that. You can imagine that, let's say the bank, he want to lend money to Kevin, meaning that he are hoping Kevin to repay him a higher interest, meaning that it's a high yield bond. Let's say the banks, he want to invest, he want to lend financing to Bill Gates, meaning that the Bill Gates is investment grade bond. So now back to our topic. Let's say you are a guy who want to invest in bond. So Kevin want to invest in bond. Kevin are providing a financing to government or company. Let's say you're gonna charge by PTPTN, you very sian already, you already feel like, oh, I always gonna charge by PTPTN. I want to charge back. I wanna charge back the interest rate from PTPTN. Yes, you can do so by buying a PTPTN bond. You feel like, oh, I always gonna tax by government. Very sian. I want to tax back the government. You can do it by buying MGS or GII. You feel like, oh, sian. Every time I get financing, I gotta charge by the house. Yeah, you can do so by buying a bank's bond, which is CIMB, as you can see on the left-hand side. Obviously, there are more information about bonds, but what I want to illustrate you here is how does a bond work. Basically, it's just easy. You're providing a financing to some company or government, and the government or company will pay you the interest and principal. So yeah, definitely when it comes to bond, right, there are a lot of things to tell again, and it probably about a 3-hour session, and I wouldn't want to go too deep today, right? Just an easy way to illustrate what is bond. So basically, if you want to buy a bond, you can buy a bond fund or buy a bond paper. So for the bond fund, right, this is one of the illustration of one of a bond fund available on our platform. So this M Income Plus, what this M Income Plus bought, he bought Malaysia government bond, he bought DRB Highcom, which is one of is a company that own Proton, and also PKNS, this kind of bond paper. And you can see that the return, which is on the downside, you can see the return is more or less is a very stable kind of return, and is less risky because this M Income Plus is a short duration bond. So yeah, short duration bond is available on our platform as well, both conventional and Sharia compliance. So similarly, you can see that 2018, 2019, the return will be slightly higher compared to the MMF, compared to the interest rate. And also 2021, 2022, the return will be adjusted because of low interest rate as well. You feel like, ayo, buy short duration bond, very sian. I can afford a little bit higher risk by buying a mid to long duration bond. feel free to do so, because you can see that these are the local bond fund, which meaning that this bond fund, they are only invest in Malaysia. Those bonds, they are denominated in Malaysia. So you can see that 2018, 2019, this bond fund can provide you a very, very lucrative kind of return. But 2020, 2021, 2021, 2022, you can see that due to a lower interest rate, due to a lot of macro backdrop out there, the bond fund is slightly underperformed. So yes, obviously, there are a lot of topics, there are a lot of information out there, and I can tell you a very, very, very long story about the bonds lah. So if you want to know more about the bonds, right, we hear you, okay? Especially when it comes to outside there, a lot of people are asking about bonds. People are keep calling to our dealer, calling to our CIS to ask about bond. So we do offer this it's a physical seminar. This is on this Saturday, and it's available in English and also a Chinese session. If you want to know more about the bonds, feel free to visit to our headquarters, which is on Bukit Bintang. It's just beside Pavilion. And we our fixed income manager, Tao Hong, he will be there, and any queries about the bonds, feel free to ask him. No matter it's technical, no matter it's non-technical, feel free to ask him, because we FSM1, we provide the service for you as low as 1K ringgit Malaysia if you want to buy bond. So if you wonder how we manage to do this, right, feel free to visit to our headquarters and ask a lot of burning questions to Tao Hong if you want to know more, right? So yeah, after this this seminar, what I just want to conclude here is, in this session, I'm not trying to pitch you which fund is suitable for you if you want to beat the market. But what I want to tell you here is, seek for some alternative of fixed deposit. Money market fund obviously is one of the good things when you want to seek for the alternative for fixed deposit. I want to seek for some alternative for fixed deposit. If you can afford a little bit risk, short duration bond fund, short duration bond is one of the very, very good tools. If you're not satisfied with the return provided by short duration bond fund, mid to long duration bond fund, definitely one of the safest option you can consider. So if you still want to know more about what one funds available on our platform, feel free to take a look on our recommended unit trust, because me and my team, we have already done the research on a quantitative and qualitative basis, and on an annual basis we will come up with this recommended unit trust to provide you some options if you don't know what to buy. So just a very quick way to conclude my session. There is no perfect investment in the world. If you go outside there, definitely a lot of people, they will give you a lot of suggestion, because ultimately each people, the risk profile are different. Nobody knows what you want, and nobody understands you more than yourself. So before you invest in something, understand the risk profile. Think why you want to invest. You want to beat inflation? You just want your money to be secure, or you want to generate a good portion kind of return. So after you know all these things, right, then you only start your investment journey. And yeah, when the market down, then you probably you wouldn't when the market is down, then probably you wouldn't that kanchong. I mean, then when market is up, you know what is the selling point and what is the buying point. So yeah, that's pretty much for my presentation. And do you have any question? Feel free to contact to our CIS. And last but not the least, our boss is very generous. He's planning to give a lot of a giveaway to you guys. So no worries. I will show you again a QR code after the Q&A session, right? So yeah, that's pretty much for my presentation. And let's move to Q&A session. Okay, so let's move to. Okay, do FSM have the same money market fund in USD? Although FSM we don't have this option in USD, but if you want to have a USD money market fund, actually on our iFast Capital platform, which maybe you can it is available from the agent side, from the IGM side, and from the B2B FA side. We do have this United USD Cash Fund. Is a money market fund that denominated in the USD. So yeah, if you want to know more, feel free to approach our B2B site, because it's only available on a sophisticated investor site. So the next question, what rating bond is acceptable? Um, Probably I don't have an answer for that because it's a very personalized kind of question. But if you ask me, personally, I would prefer this investment grade bond. So yeah, it's a little bit sophisticated. I just want to go very quick one. So if you look at the spread between let's say for Malaysia bond, right? If you look at the spread, the triple A, double B, triple B, this kind of spread, right? Actually the triple A and the A, the spread is minimal, is not that huge. But if you look at the spread between A and triple B, actually the spread is pretty lucrative, I would say. So you can take more return by taking a similar kind of risk. So if I were you personally, I would go for probably triple B and triple B to maybe A kind of rating. But ultimately, it's a very personalized kind of investment because I don't know what's the risk profile and I don't know what's the financial goal of you. So if you want to know more, feel free to approach to our dealer and also the CIS. Then they can provide you a very personalized kind of a reply. So yeah, are there any taxable on the profit of the bond? Well, if you are retail investors, fortunately for Malaysia, we at this juncture we still don't have a capital gain tax from on Malaysia. So, if you are retail investors, the return you generate from bond is not taxable. While if you are corporate, right, at this juncture, if you go for this kind of short duration bond, most of the bond fund is not taxable as well. But yeah, that's pretty much for my question for my reply. So the next question, how to determine what investment horizon is suitable for an investor? What criteria to consider for bonds? When it comes to bonds, first thing you need to consider is the duration. You want to invest in a bond with long duration or short duration, meaning that the longer the duration, the higher the yield. However, it comes with the risk. Let's say you invest in let's say Malaysia government securities, MGS. You invest in MGS and you invest in 1 year MGS. Do you believe Malaysia will go bankrupt in the next 1 year? If you are not a believer of that, then it provides you should go into the MGS 1 year. But if you go to the MGS 10 year, do you a believer that Malaysia will go bankrupt within the next decades? If you're not a believer of that, then feel free to go for a longer duration because with a longer duration and you believe that Malaysia wouldn't have this kind of a bankrupt issue, then the longer duration can provide you more return compared to the short duration bond. So yeah, that's for the duration. The next is a credit rating, which means that the potential yield provide you. Let's say you want to invest in a very safe. To you don't want to invest in anything risky. You don't want to look at any red color on the portfolio. Then when it comes to bond, you have two options. You have Malaysia government, or let's say you have two options. You have Maybank or you have Evergrande. Evergrande is one of the higher bond in China. So you got two bonds there. So if you want to invest in very safe kind of return, you don't want to accept any risk. Definitely, Maybank is a suitable bond for you because do you believe that Maybank will go bankrupt? Obviously, I don't have answer for that, but it depends on your belief. So if you want to go for bonds, definitely it's a very personalized kind of question, and yeah, that's my answer for that. Is in summary, is a credit and the duration. Yep. So that's from this question. And next, liking a Korean military hairstyle. Yeah, thanks for that. Okay, so for the next question, does the performance on the money market fund react as much as a fixed deposit towards the interest rate determined by the Federal Reserve? So for the money market fund in Malaysia, right, actually is more is more depends on our Bank Negara Malaysia monetary policy rather than the Fed's reserve, which is on the US central banks. So yeah, the money market fund, they do react compared to fixed deposit. But why I say that money market fund is a very good alternative compared to fixed deposit. Let's say the fixed deposit nowadays they give you most of the fixed deposit out there give you 4% kind of return, but you need to lock your money within 1 year. So let's say you put your money in a fixed deposit, and suddenly the Bank Negara Malaysia they announce that, oh, I'm gonna increase my interest rate with maybe 2% more. Who knows? I mean, it's definitely it's an uncertainty. So when the banks they want to increase the interest rate, for sure, the fixed deposit out there, they will offer you, and then they need to offer you a higher kind of a return as well. But your money already locked inside the fixed deposit that you invested previously. So in order to if you want to enjoy the higher return, you need to withdraw the money and put your money inside again, which I think is a little bit unnecessary lah. So that's why when it comes to money market fund, it provides you a lot of leeway. You want to invest in anything, feel free. You just invest in money market fund, and you find that, oh, there's any opportunity out there, you just withdraw the money from money market fund and place the money anywhere. So yep, in a conclusion, definitely a money market fund, it will go through a similar way compared to fixed deposit. But what the money market fund can provide you is the flexibility. All right, is a flexibility with a similar return. So yep, definitely, in conclusion, money market fund is a very good alternative for fixed deposit. So yeah, does bond fund give consistent coupon payment to the investors? I don't have a very exact answer for this, because ultimately a lot of bond fund out there, they have a different features. But most of the bond fund or most of the income fund, they do provide a consistent coupon payment to the investors. Or if you are an equity investor, you can imagine it's like a dividend yielders lah. So basically for bond fund, they do provide this kind of income payment to the investors. So next, for wholesale bond, only sophisticated investors allowed to invest. Must we provide any supporting documents to prove, or just sign off declaration? For this question, right? Actually, I don't have answer for that, and our CIS team, Yvonne, if you have any answer for this, feel free to reply on chat box. So I'll just skip on the next question. Understand that a money market fund has flexibility of withdrawal anytime. However, the returns from this fund are generally lower compared to FD. Perhaps you can share thoughts. Yep, this is one of a very frequent question that I get from the ground, right? Definitely, when it comes to fixed money market fund, generally the return will be lower compared to fixed deposit. So in this case, let's say one of the parking facility on our platform, RHB Cash Management Fund 2, it can provide you about 3.6% return, while the fixed deposit out there, if you consider the promo rate, is about 4%. So it's only about 0.4% return. But if you invest in fixed deposit, you are sacrificing your flexibility. But if you invest in money market fund, just about 0.4%, because I know that actually out there, at least for me, I personally, I'm not a millionaire, and at least for me, the 0.4% actually is nothing much difference for me. But what I need is the liquidity, because ultimately I don't know what's gonna happen tomorrow. Maybe tomorrow I need the money urgently, and if I withdraw the money from fixed deposit, I'm gonna sacrifice all the 4% return. But if I withdraw the money from the money market fund, I don't need to sacrifice any kind of return. So the 0.4% is what we call as opportunity cost. And personally, I think that 0.5% as a retailer like me is not a consideration. So yeah, ultimately it depends on you, because only you know yourself very well. You know that how much money you need in order to survive, in order to achieve something. But for me, definitely money market fund is one of the good way to park your money elsewhere while enjoying the return. So yeah, next question, are we able to invest in a callable negotiable instrument deposit on FSM1? At this juncture, we still don't have this option. But if you want to invest in this kind of very short-term financing, then actually our bond team, we just launched the US Treasury, and you can invest as low as $1K US. And if you want to know more, feel free to approach to our bond team. Or you can attend to our physical seminar this Saturday. Our manager is there and prepared to answer all the questions about the bonds. So the next question, buying bonds from bank versus FSM, how to compare which is better? Okay, well, it's a very good question, because actually a lot of people, they are asking about the same question as well. Well, if you buy the banks in bond, if you buy the bond in bank, right? Okay, sorry, a little bit confused. If you buy the bonds from banks, usually for banks, because they are liaising with a very large portion of money, so a lot of product they can offer via bonds, right? is they have a minimum purchase amount, which generally is about 250K. So if you don't have that much of money and you feel like you still want to invest in this kind of safer instruments, then feel free to go to FSM, because I do not deny the fact that in some sense the platform fee for FSM is slightly higher than banks, but we can provide you, especially for retailers, a much lower minimum amount to invest. If you want to know more, feel free to approach to the like what I say, the dealers. And if you want to know more, just by reading our Bond Express, we do have a lot of choices on our platform, and all the bonds that offered by us already analyzed by our fixed income analysts, and is I wouldn't say it's guaranteed, but it's a much safer option compared out there. So yeah, that's question for bonds. There for the next question. Okay, it's a math class. Mr. A has 750K. He only needs 500K for himself to spend on his expenditure, and the remaining of 250 is either, and parking into the fixed deposit is the most logical choice. Why? Because better than bond ROI. Yeah, for sure. If you just want a very stable return and you are very guaranteed, you assured that you wouldn't want to use the 250K at all. Yep, maybe fixed deposit is a good choice for you, because the fixed deposit can offer you 4%. But ultimately, you never say never, because no one knows what's gonna happen in the next few days or even next few months. Nobody knows what's gonna happen. So that's why if you don't want to invest in bond, you are satisfying with fixed deposit. So let's say the 250K times the 4%, and 250K times maybe 3.6%. Actually, the 0.4% is not that huge. I mean, the divergence is not that huge. So probably a money market fund. Although I do agree with the fact that the potential return gained by money market fund is slightly lower, but as I mentioned thousands times, is the liquidity, because ultimately you wouldn't know what's gonna happen in the next few months. So it's a liquidity issue when it comes to money market fund. That's why it's a very good alternative for fixed deposit. So yeah, for the next question, why are all the fixed income need platform fee every quarterly? Yeah, this is a very good question, and you should question it to the Tao Hong, which is our bond fund manager, and definitely he will give you a very satisfying answer. All right. So yeah, I'm gonna skip that question because I'm not the best candidate to answer that. So next question, how are the bond unit trusts different than bonds in terms of return? So if you buy bonds, right, basically you are a believer that the bond paper you buying, let's say you're buying a MGS, meaning that you are hoping that the Malaysian government wouldn't go bankrupt. So yeah, you're a believer that the Malaysian government wouldn't go bankrupt. That's why you're buying the bonds, right? But if you want to seek for a more diversified kind of a portfolio, because you don't want to over concentrate on some bonds, because ultimately, like I mentioned a lot of times already, no one gonna know what's gonna happen in the next few months, right? Although yeah, in general, like some of the companies out there like Maybank, CIMB, the chance for the bankruptcy is very little, but never say no, right? It's ultimately it's not 0%. So yeah, when you don't want to over concentrate on some bond, definitely you should go for bond unit trust. But if you are a believer that some company or some government or even some agencies that they're very good, they're providing you a very good return, and you're a believer of the bonds, yep, you should go for the bond paper. And next, what's the difference between a bond unit trust and bond paper? Bond unit trust, the average yield, is a variable. So basically, the average yield year by year, time on time, it's gonna change. However, if let's say if you are a believer that let's say the coupon rate nowadays some corporate bond they can offer up to about 7 to 8%. Let's say you are okay with let's say 8%. You are okay with 8% per annum in the next, let's say, 10 years. If you are okay with 7%, 8% per annum 10 years by just investing in this bond. So basically, you just invest in the bond, and you can technically so-called lock in the 7 to 8% percentage kind of a coupon rate in the next 10 years. So if you want to lock in the profit, lock in the income, yeah, then bond paper is a better choice. If you just want to go for more diversified and you don't want over concentrate on a portfolio, bond unit trust is a better choice for you. So yeah, you mentioned that the potential lucrative returns equal to high risk, like the saying goes, no risk, no gain. So this high risk may not be suitable for elderly folks, as it may burn their capital if returns turn downside, right? Yeah, definitely. A lot of people, they are saying that bond is a very old man product. Because why? Because the income stream that generated from bond usually technically is lesser compared to if you invest in equity, you invest in business, you invest in property, you invest in crypto. However, what can bond and even a money market fund can provide you is the stability. Because actually out there, right, I do meet a lot of clients. A lot of clients, after they have a portion of money, but they don't know where to invest, and they don't want to face too lot of risk. They just want a very stable income stream. Then yeah, just go for bond, just go for this kind of low risk instrument. Because yeah, if you invest in those very risky kind of investment, right, let's say equity, yeah, potentially you could achieve a very lucrative kind of return. But I mean, nobody knows what's gonna happen, right? If the market go down, then you're gonna bear the risk to lose the money. But if you invest in bond, meaning that the risk that you're bearing is much lesser. So that's why when it comes to some of investors, some very low risk appetite kind of investors, usually I just suggest you to invest in bond lah, because yeah, like no, all people like money, right? The higher the return, the better it is. But it's not only about money. It's also about the risk that you are bearing. So yeah, if you're seeking for a very low risk kind of investment, definitely go for bond. It's a good choice for you. So yeah, for the next question, beside FD, any other investment which is risk free or near to risk free? So yep, is one of our topic today. Money market fund, short duration bond, and if you can achieve, you want you want a higher one, short duration, the mid duration to longer duration bond. So money market fund is an instrument that the returns more or less similar to fixed deposit, but it can provide you a much more liquidity. Short duration bond is a slightly higher risk compared to fixed deposit, but because of a short duration and the income stream, so generally it can provide you a slightly higher return compared to fixed deposit. So yeah, in conclusion, if you want to find any alternative for fixed deposit, money market fund, short duration bond, and mid to long duration bond. So next, the bond fund now considered at high price still got room to improve further. Well, this is a market related question, right? So yeah, usually the bond fund, it will fluctuate, depends on how the interest rate goes. So we have already experienced the Bank Negara Malaysia hike interest rate consecutively 4 times last year. This time around, in January, the Bank Negara has paused the interest rate, and the Bank Negara gonna announce it again. I think it's by I think it's Thursday or Friday. The Bank Negara Malaysia gonna announce again their monetary policy. So you can imagine like this lah. So the yield and the interest rate, theoretically it should go to the similar way, because when the Bank Negara Malaysia it announced to hike the interest rate, the yield should go up. But you can notice that it's not only Malaysia, it's also when the Fed in the last few years, it's the last few times when the Fed announced to raise their their Fed rate, the yield is going down. Why? Because yield are decided by the market, while the interest rate are decided by the central banks. So the market are already expecting the central banks will go until this high. So that's why when last time when the Fed announced they're gonna hike the interest rate, but the yield go the other side, yield goes down, meaning that the bond fund wouldn't affect them much. So if back to the question, the bond fund now considered at high price, still got room to improve further. Ultimately, it's just a very personalized question lah. So if you ask me, is the bond fund a very good timing to buy? I would say that if you are a believer that the Banknogram is just a disclaimer that I just using Malaysia Bond Fund as an example. If you are a believer that the Banknogram Malaysia, it will continue their current monetary policy, which is remain at 2.75%. Maybe you can wait for a few more days lah to make sure how's the Banknogram Banknogram Malaysia monetary policy, meaning that are they going to hike the interest rate to 3%? So if I were you, because usually for those people who want to invest in bond fund, right, they are more less risky kind of people. So definitely, I personally I will care more about risk compared to return. So if you sacrifice these few days and you're just sacrificing a little bit of potential return, then personally, I will wait for a few days to make sure what's the monetary stance of a Banknogram Malaysia and to look at the how's the yield goes So yeah, that's my answer for this bond fund. So last but not the least, what's the difference investing with iFAST versus FSM? So just a very quick introduction. FSM1, we are a entity that under iFAST Capital. So for the iFAST Capital, we focus on the B2B side because ultimately some people they require advice from financial advisor. Then they don't have a time. They don't want to make this kind of DIY platform themselves. But FSM1 is a very DIY. It's a DIY kind of platform. So if you invest in FSM, meaning that you are DIYing your personal portfolio without any advice. But if you need any value-added services provided by a financial advisor out there, iFAST is a better choice for you. But ultimately, we are the same entity, so no matter what kind of what you invest, basically it's the same stuff So yeah, that's all for my presentation. If there is no any other question, let's go to the most exciting part, which is the FSM1 giveaway. So yeah, that's the QR code. I will pause my QR code here and feel free to pose the question if you have any other queries about market, about products as well. So Yvonne, are you there, Yvonne?
Hi, Kevin. Yes, I'm here.
Yeah, I will leave the page here and just feel free to leave a webinar after you scan this QR code. And once again, thanks for everyone for visiting our webinar today. And I hope you achieve something about investment when it comes to FSM1. And do you have any question? Feel free to drop a question to drop an email, drop a reply to our CIS, to our dealers, to our research as well. And actually, I do notice there are a lot of people that are asking about bonds. This Saturday, our fixed income manager, Tao Hong, he's going to present to you the bond. So if you have any question about any burning question, feel free to kacau Tao Hong. I mean, just kacau him, no worries. Yeah, I saw one of the attendees, she mentioned that I couldn't join the first seminar, or right? Okay, so if you can't manage to join this seminar, no worries, because our boss is very generous. We do give this kind of giveaway very often So stay tuned to our website, because we do always give you money. Everyone likes free money. Okay. Yeah, that's all for my presentation. Hope to see you guys next time. And again, happy International Women's Day. That's all for my presentation. Thank you, everyone.
Thank you, Mr. Kevin. It's a very insightful and comprehensive presentation. So I'll leave this page for another 10 seconds, and feel free to capture this QR code, and then you can scan it and participate with our Join and Win March giveaway. So we will be having this FSM1 15th anniversary giveaway for every month. So please stay tuned to our FSM1 website and also our Facebook page to know more about the information. Thank you.